What's up, everybody? Why is this so slow? I was trying to update my Excel file and it's just like frozen. So annoying when this stuff happens. Is it because I'm on a live stream, so it's taking a lot of energy from the computer? Finally, the market is crazy. Everybody's making money. I don't know. I can't do anything. It's just freezing up. Netflix all-time high. I picked up a lot of Netflix back in 2022. God, what's going on? I don't know why I can't do anything. It just finally. Yeah, because Netflix was over $700 at one point at the peak in 2022. Obviously it peaked even further, but God, why is it so slow? I hate this. Because I wanted to get Netflix back in like 2010, 2011, 2012, and I just didn't pull the trigger, and it shot up to like 700. And then let me show you the chart. It's easy to look at. Okay, I just wanted to. And then it came down. It was down almost 50%. So I thought it was a good time to buy. So this is what I bought. So okay, in 2021 it peaked at 700. I don't think it hit 700. I think it got really close. And am I like a broken record? Do I say the same thing over and over? I feel like I do. Groundhog's Day. In January 2022, I got it for 388. I wish we could zoom in further. I know in Yahoo Finance you could pick. What's going on, Rusty? How's your day going? I kind of had a bad day. This company wanted. I had a second interview at this company, and I didn't really want the job, so it wasn't a big deal. But I was just annoyed at myself because I don't think I usually interview really well, and I didn't do a good job. Like I wasn't relaxed, and it just bothers me because it's like you're not saying even if you don't want to go to the party, you still want to be invited. So even though I didn't want the job because it was kind of like a little inconvenient. It was actually about 30-40% more money, but it just seemed like a nightmare. The like their accounting was just such a mess, and I would have to like to get it back up to some normal standard. It would just take forever, and I didn't. I've been in that situation before, and okay, so Netflix. So remember when you had when you used to get that red CD in the mail from Netflix, because they used to like mail you a CD if you wanted a movie, or you can stream. That was in like 2010, 2009. It was such a cool concept, that red packet, and it was like overnight, so you could get unlimited movies. It was a great service. So I didn't pick up any Netflix, and then it almost hit 700. I remember when I wanted to buy it, it was like 50, and it almost hit 700 at the end of 2021, which was the peak for a lot of stocks, the post-COVID crash. I mean, the post-COVID surge. You had the COVID crash, March 2020, pretty much March 2020. It was like not even like a 1 month crash, and it came right back. It usually takes like a little longer, like 6 to 9 months to come back. So, anyways, so I had some money, like 40K, I wanted to invest, and I missed the boat on Netflix. But then I picked it up at 388 in January 2022. So it must have been at the end of 2022, end of January, because to start the new year, it was 550, and then at the end of the month, end of January, it came down to below 400. So I was like, wow, below 400, this seems like a good, because I think it was like 690 to 388. So how much is that? What's that drop? So it fell 302 points, not quite 50%, but it's probably 45%, 44%. So 44% drop from the peak. So I'm like, okay, good time to get in. And then it just crashed. It went down much further. So I was down like 50% right away. Like after 3 months of owning it was down 50%. Of course, now I'm like, why don't you just buy more? It's easy now to say that, but at the time I put 40K into it and I'm down to 20K. So going well, just finishing a hot date with my laundry hamper. Good one. But I knew Netflix is a good company, so I wasn't scared. Of course, if I was so confident, why didn't I buy more? But I guess I didn't. Was this the Bill Wong fiasco when he was doing total return swaps? Was this part of that situation? That's why this big steep red line, because that's a really steep red line. Look at that. But you could have got it for under 200 in 2022. It looks like it was as low as like maybe even 170. And then, as you know now, it's over 1,300. You could, in 3 years, you could have 6x your investment on Netflix. See, you could buy a great company and still get an amazing return. It's not like when you used to buy great companies like in the 80s and you buy IBM, you'd have to wait so many years to double your money. It was going up like a snail. Like if you got a 20% jump in 1 year, that was amazing. Now it's like the volatility and there's so many people trading. So I think that's the best strategy. That's how I made pretty much all my money in the market, is really, really good companies at a discount. I mean, if you look at like one investment I did well on, new holdings, new bank. I'm up 213%. So that's out of my wheelhouse. I invested in them. I ended up selling off some and buying Lumen, and look at Lumen, down 53%. So I bought Nubank. I did put like 35K in, and it was up to 100, but I sold 20K. I wish I didn't, of course, but whatever. So in this block, I guess you could say I put 20K into new, added 40K on top of that. Now I'm at 60K. So that worked out really well. But if I look at all the other companies I invested in, Lumen is an example, all the other companies that I invested in that are outside my wheelhouse, like any company that's below like 100 billion market cap, I think I probably lost money on those investments overall. If I were to just stuck to really, really good companies and not try to pick a stock that I thought was had the potential at 10x, 20x, it almost never happens. And if it does happen, it doesn't give me back all the losses from all these crappy investments. Because in order to get the money for Netflix, Netflix is here. In order to get the 40K to put into Netflix, I only put it's 156K my Netflix. I put 46K into it. Now I'm at 156. But where did I get the 46 from? I put 90,000 into ASAP. It was a different name. Now it's called ASAP. Oh, did it go to business? What's that SPAC? You guys know that SPAC I invested in. The delivery service. They're like similar to Uber Eats, but they only do deliveries. ASAP stock. And they must have went bankrupt. Food delivery. Waiter. So I put 90K into Waiter. And now they filed Chapter 7. So and it's funny because I think Morgan Stanley also put a lot of money to Waiter the same time I did. And the stock was up like 30%, 40% after a couple of weeks. So I could have made a 30, 40% return on Waiter. I had like my 90K was like 120, 130. And I let it ride. And then I sold it at pretty much like a 50% loss. So I sold my original 90K turned into about half that. And I sold it and took the loss. It would have went all the way down to zero. What a garbage company. It's ASAPQ. That's a ticker. But like if I tell my wife this stuff, I said, I put 90K into this SPAC, and after like 3 months, it was at 120K. She always says the same thing. Why don't you just sell it if it was up? I said, well, yeah, I guess, yeah, if I could have made money instead of losing money. I could have sold it and made 30% instead of losing 50%. I guess if I had a crystal ball. But if I applied that every time, I would never make money with most of my stocks. Like the Netflix, which is up 240%, I would have sold it. Like if I use her strategy, when you're up like 20, 30%, just sell it. And I would never realize these big returns. Really good companies at a good price, just like Munger and Buffett. Yeah, I mean that's just pretty much how I made in terms of market most of the money. And I recouped a lot of losses. But the thing is, I put 90,000 into ASAP. I burned half of it, and then I put that into Netflix. I don't know if I would have bought Netflix. I was looking to get my money back. My original 90, I was looking to get that back, but I don't want to make it too. So I thought Netflix was a good investment because it's a good company. They're down almost 50%. Dividend paying stock and never get my money back. But I was looking at this stock, CORZ, CORZ. I wanted to do a video on it. It's getting a lot of interest in the market. It's Core Scientific. A lot of people looking at the stock. I mean, look how much it went up recently. Just this week, what's today's date? Today's 27th. So just on Monday, it was 11. It closed the week at close 17. So in 1 week, it went from 11 to 17. So what's going on with this stock? Why is it jumping so much? It's a pretty new stock. It's was it like 16 months old? I don't know. It started out at $3, which is really weird. Stocks usually don't start out at $3. I'm not sure what happened there. So I'm having a little problem with Camtasia trying to get. It's not really recording well anymore. I don't know what's going on. So I put together my Excel DCF model. It was really hard to value. I just kind of a lot of guessing on this one. But look at this revenue. It went from 640 million in 2022 down 22% to 500 million. It did go up a little bit in 2024 to 511 million, but then down again, down 20% in the trailing 12 months to 411 million. So it's really concerning when you see that. I can handle free cash flow going down and net income going down, but I can't really handle revenue going down because the top line should be going up. The reason I don't mind free cash flow going down is because they may be investing towards the future. And that's what you have to do in the early years, is that you take all your profits, all your cash flow, and just keep reinvesting it for growth. But when your top line is not growing, that's, you're headed towards one place, bankruptcy. But I mean, I'm sure there's more to the situation. So that's why I want to do a video. Let me know what you guys think about this stock, if you have any thoughts. So Core Scientific. Okay. So it provides digital asset mining services in the US. Digital assets. So it's tied to crypto. It operates through 3 segments: digital asset self-mining, digital asset hosted mining, and HPC hosting. High performance computer. I guess that's what HPC. High performance computing. Okay, the company offers digital infrastructure, software solutions and services, and operates licensing data center space facilities. So if you're looking to get into crypto, this is just a play on crypto. So you can buy crypto straight, buying Bitcoin, or you can invest in companies like this. Let me just see what. It also deploys and operates its own large fleet of miners within owned digital infrastructure as part of a pool of users that process transactions conducted on one or more blockchain networks. Okay. So this is like a pure play crypto kind of company. In addition, the company provides electrical power, repair, and other infrastructure services to operate, maintain, and earn digital assets, and sells mining equipment to customers. Pretty new company, founded in 2017. They're in Delaware. It seems like sometimes people don't feel comfortable investing in like a commodity or a specific type of asset or specific industry. So if you do a pick and shovel type company, a service type company, it can give you a little more comfort. Simply Wall Street does not value the stock. 13 analysts have it at $20. So they say it's slightly undervalued. Let's see, negative equity. They're $1 billion of debt with negative equity. Let's see how much cash they have. They have 700 million of cash, so 70% of their debt in cash. This is what I mean, like earlier when I say we're talking about investing in like riskier stocks. It's fun to put money into like risky stocks. When I was younger, it was more fun. Now it's not so much fun, but it's uh it's exciting in terms of, if you pick a real big winner. But it's so funny because even if you pick a winner, you're not happy because you didn't invest a lot of money. And like if you do something like I did, I put 90K into a company that eventually went bankrupt. I was looking for a home run and I just picked the wrong horse. And it's hard to know like at what point to sell. Because could you imagine putting like 90K into Nvidia and then selling it at like 200K instead of waiting another year when it was 2 million? It's just a nightmare. I'd be so upset. It's just making making a return of, what is it, like 120%? 122% return. Like if you sold Nvidia, say, and had this return, but if you just waited 9 months after this, you could have had 2 million instead of 200,000. Like it's just a nightmare because I don't really get mad if, well, a little bit, but I usually don't get mad if I didn't make money by not investing in stock like Nvidia. I didn't make any money in Nvidia because I didn't invest in them. I have index funds like the S&P 500 index, so I do have Nvidia in that respect, but I never invested in them straight. So I don't like get pissed off when I see Nvidia going up every day. But when I own a stock, and this hasn't happened too often, Palantir is the biggest example of this. When I own a stock and I sell it, and then it goes through the roof, that drives me nuts. Because I own Palantir and I sold at a loss, and I owned it. I don't know how much money I had into it, but it's hard to like drop a ton of money into a stock. You can only do that so often. I bought Palantir at 7 and sold 11. It's just a nightmare because people don't get it. Like if you talk to someone who doesn't invest in the market and you tell them, yeah, I bought it at 7, I sold at 11, a 57% return. So let's say you had 100, if you bought 100 shares. I don't know how many you bought, but just we'll use that example. Bought 100 shares. So it's still 57% return. So you made $400. Um, instead, you could have waited for it to go to 150 and made $14,000. You 1,000 shares. It's a killer, right? Because if you had 1,000 shares, and it reached its all-time high today, 158. So you gave up $151,000. Well, this is what you could have had. You could have had this, but instead you got $4,000. You could have had 100. It's the same return. You still get a 57% return whether it's one share or 1 million shares, but you made $4,000 on Palantir because the shares went from 7 to 11. But if you waited till today to sell, you could have made $151,000. And I wouldn't get mad because I never bought Palant. Well, I did buy Palant. What am I saying? I'm thinking Nvidia. Like what am I doing? I'm an idiot. I'm thinking Nvidia. I'm so stupid. Oh, it's okay. Sorry, I messed up the. I was doing. Okay. You're Palantir, not Nvidia. I don't know what I'm doing. It's actually pretty close, ironically. Yeah, Palantir closed at 131. So if you would have waited till today, you could have made 124,000. Instead, you made 4,000. That's how I started investing when I made 57% in 1 month. Because you feel great. You're like, oh wow, 57%. I'm so smart. But it's not. It's not life changing at all. $4,000. But it's hard to drop like, it's hard to drop like 700K into a stock. That's a lot. Let's do something normal. So dropping 100K into a stock, which is hard to do because you need to have that money. And not only do you need to have 100K, you need to have a lot more than 100K because you're not going to put everything into one stock. So you need to have at least a couple of million to really risk that. And then so that's a good return. That's a good number, $60,000. That's helpful, but it's not really life changing at all, especially if you live in America. But what is life changing is 1.8 million. That's really that adjusts your life a lot. Even if you're, for me too, but if your net worth is like $500,000 or less, that is life changing. But even if your net worth is like 2, 3, 4 million, to like almost double your net worth. But it's hard. Like that's why people ask, like, tell me the next Amazon or the next Tesla, and I say, even if I did tell you it, you're not going to hold the stock for 25 years to realize all those gains. It's not going to happen. Because even if I told you in 1999 to buy Amazon, and you put $10,000 into Amazon, and then say, I don't know the exact numbers, but I'm just giving you an idea. And then the following year, you're at $15,000. You're like, oh, Scott, you're a genius. And then the following year, in the first half of 2001, you're at like $21,000. And the second half of 2001, you're at like $3,000. Actually, maybe less. Didn't it go down like 90%? $2,000. So if you had 10K and it went more than doubled pretty quickly, then it dropped down to 2K, you'd be crying. Like, oh God, why didn't I sell? Why didn't I sell? And then you know, the following year it's up to 5,000, then it's up to like 18,000, and you sell. You're like, okay, finally, I got back to where I am. But if you would have held out to like 2010, you could have turned it into like, like 1.5 million. And, but if you held it out to 2025, you could have like 12 million. But people couldn't do it. There's no way anybody can see $1 million in their account and not sell, or sell most of it. Like there's just no way. It's hard to sit on a stock and see the ups and downs and not give in. If it just goes up in a straight line, it's not that hard. But the problem is when it goes down, and then you're like every day you're cursing that you didn't sell, and then when it comes back to where it was, then a lot of people would sell if they haven't already. And then it like goes up and down, up and down. But we're getting older. At what point is it? Are we gonna just not stop learning? And like everything is like a learning. Like I lost 20K or 20%, but I'm learning. So now I know what to do next, which is great, right? But what if you're 60 years old? At some point you got to stop making these mistakes where you learn and you're going to start seeing real results. You can make a few mistakes here and there, but at some point you got to start start moving forward with it. That's why most people, it just doesn't work investing. Like they just can't do it. They don't have the stomach for it. That's why something like 80% of investors lose money. And it's the 5-10% that make money, but they make a lot of money. And the market goes up because of that 5-10%. They take the 80%'s money. Because a lot of investors go in with 10, 20, 30K, and they if it goes up, then everything's fine. But eventually it's going to come down crashing. And people just sell. They usually just sell out. They're like, I can't take it. It's going to go to zero. Most people don't wait for it to go back up. Like when I'm doing this analogy, generally the way people invest is when it's really low, the stock, they sell. And when it's really high, the stock, they buy. They do the exact opposite. Because they don't know about a stock until everybody's talking about it, like Nvidia. So that's when they buy it, when it's already at a peak. And then and they don't sell when it's going up because they're like, oh my God, it's going to keep going up. But then when it starts coming down, then they sell it out of fear. So yeah, I wanted to learn more about this company, Core Scientific. It seems like an interesting crypto play. 12-year contracts with CoreWeave provide 10 billion in recurring revenue. That's a lot of recurring revenue for a company of this size. 10 billion. And they're only they're less than 5 billion market cap. It's a pretty small company to have a 10 billion of revenue. And CoreWeave is a pretty big player. CoreWeave, they have 2 billion of revenue. CRWV, Argentina. I went to Buenos Aires uh, for a few days. I did like a South America tour. When I first met my wife, when we were dating, just within the first year of dating, we did a South America tour. It was ABC. Uh, it wasn't in that order, but that's how I remember it. Argentina, Brazil, Chile, and then Uruguay. Uruguay. Um, Argentina. It was like a kind of a quasi discounted tour, um, but it was good. Chile was the best. Santiago, um, it was a little more developed. Argentina was really nice too. Brazil was a little. Was in Rio. It was a bit rundown. There's homeless people. I didn't feel too. I didn't feel uncomfortable, although people said crime is decent there. Yeah, hopefully you come to America if you're in California. But I do want to go back. I remember in Buenos Aires, it was so cheap. Like it was like $25 for dinner for two people, and we had like really nice meals like steak, and we had wine and appetizers. The dollar goes so far, especially Argentina. It's just that terrible economy. Um, it's always been that way in Argentina. The inflation is rampant. Um, it's just like every year the it's the government. That's how the economy works. It's the government, and when your government is corrupt or inept, people just don't have faith in the currency. Because could you imagine buying a home, spending like $1 million on a home, and then the asset is nearly worthless a few years later? Or you save up in retirement, you save up for decades, you save a few $1,000s a month or a few $1,000s a year, and you accumulate like a net worth of 2 million, and it's worthless. That's how it is there. So people have no faith. In America, we're comfortable with the dollar, so we're willing to put money into the economy, invest. That's how you can tell how good economy is how many stocks trade in the US. So how many Argentinian companies, how many public companies in Argentina? Yeah. And like a lot of countries you'll never see, like in like Turkey, you'll never see a Turkish company that trades in the United States, or a Afghani company that trades in the US. The economy, even if the company is a great company, even if they sell an amazing product, it's the country risk. That's why you get huge discounts for Brazilian stocks and what's it called? South African stocks, because what those are like in the middle of the pack, like Brazil, um, parts of Africa. Like they're not too risky where you avoid it totally, but you're expected a pretty high return on it, like a 10% dividend, because you're taking so much risk. Like if you invest in a German stock or a Canadian, like a German company that trades in the United States, like BMW or a Canadian company that trades in the United States. It's not too risky. Those are pretty developed countries. It's more risky than the U.S., but it's not really that risky. You're not worried about that. The the government of um, the UK government taking over companies and not letting them trade or with it's just not going to happen. But in some of these countries, that's what happens. Argentina's inflation is now minuscule. It came down. What what happened? How did it come down? Let's see. I don't know. Like, I mean, it's not minuscule. I mean, it's minuscule relative to its peak. But could you 47% inflation? What if it says 43%? Uh, remember when we were like at 8% inflation and everything was, you know, the world almost blew up because we were at 8% inflation. Like it was bad. What's going on? Why is it so freaking slow? Like this is the same chart, the same website. So this is the U.S. inflation. You see, it went through. It was 8, and like it was really bad. A lot of concern about the economy, and of course, it came back down, so everything was okay. But I mean, could you imagine we're at 40% inflation? I mean, even 10% like was god awful. Could you imagine? They're at 40% right now, Argentina, which is low for them. But I mean, 40% inflation, you're just killing the economy. Look historically, it's almost always above 20%. I mean, it was almost 300% just last year. That's a good point. Everything is relative. So that is a good point. So they're used to it. Yeah, they're used to that inflation. So it's more doable, I guess. But I mean, inflation is just a tax on your savings, on your cash. That's all it is. So it's just making your cash worthless. So if you have $1 million in cash in the bank, right, and you don't touch it, um, it's just it's each year it's getting less and less valuable. In the U.S., it is getting less and less valuable, but in Argentina, it's it's at like it's like on steroids. Because could you imagine having 1 million? Like say it's well, even just go back. Say it's 1980, and you have 1 million in cash, and you let it grow at whatever the savings rate is. 1%. Some year, 3 years ago in 2021, you could have got 4 or 5% savings rate, but generally it's like 1%, 2%, maybe 3%. So you turn 1 million to 1.5 million in like 45 years. Or a house. Well, alternatively, say instead of leaving in cash, you bought a $1 million home. That home is probably worth like 10 million. Obviously, it depends on the area. I'm just talking about average home rates. So that's why sitting on cash in the US, it's not terrible. Sitting on cash, if it's for a short amount of time, you don't want to sit on cash for like decades and decades, a lot of cash. But if you do it in Argentina, you can't sit on cash because that $1 million is going to be worthless. And every year it goes by, it's killing it. Money is flooding back into the country. The new president is kicking ass. Yeah, I'm sure it's better. It's definitely a lot better. So it's a huge improvement. But you're totally correct when you say it is relative, because it's kind of like, I guess, you ever watch that TV show, My 600-Pound Life? Like it. If somebody's 600 pounds, right? Say your cousin is 600 pounds and you're 250 pounds. So you're both overweight, but obviously, say you're both like 5'10". So you're overweight, but he's really overweight. So if he goes from 600 to 400, and you go from 250 to 220, so you're both improving. But you can't look at him and say, of course, compared to you 400 pounds would be a nightmare. That's like doubling your weight if you're 220. But for him, it's like he's in a great position because it's relative to where he was previously. And now he could finally walk and not be bedbound. So I guess it's like that. Argentina is like 600 pounds, and now they're 400 pounds. And even though they're extremely overweight, they're much better off than they were. Where we went from 250 to 220, and although based on our height, our goal is like a 170. So you're getting there, but he's still far away. But if you compare it to your base where you were previously at your worst, he's doing great. But yeah, but I am excited because when other countries prosper, it doesn't only just help that country; it helps other countries, because that's why the stock market is going up so much. Not just because the U.S. is doing so much better than it was in previous years. It is. U.S. companies are doing amazing. We're extremely profitable. When you compare the U.S. to previous, like a decade ago, 30 years ago, 40 years ago, we're extremely profitable. But it helps a lot when other countries are extremely profitable and improving too, because they're putting money to our economy. We put money into their economy, so we're helping each other. And that's really the reason the stock market is going up so much, is because the world is improving so much and it's so profitable. Yeah, that is interesting. Look at it, it was really low. I wonder how they got it down to 0.3%. Even this is the US. What am I doing? I was Yeah, it was always, even at the best, it was 20% at the best. Which I guess if they get back there, that would be amazing. Because 40% inflation is just crazy. It's like every year, in the US, things are getting more expensive. But could you imagine just like things are, some years they just double, or the better years, prices go up 50%. It, it would just be like something as like a $10,000 car in 2017 would cost like $300,000 just 8 years later, or more actually. If you're very poor, it destroys you. I can imagine. It destroys everyone, but if you're poor, you're in bad shape. Because the only way to combat inflation is to limit the cash you have and have assets, because assets theoretically move with inflation. So that's why you want to have money in the stock market, or you want to own real estate, or you want to own an asset that moves up in value, artwork, something. Because if you sit on cash, it just destroys you, especially in Argentina. But what is Venezuela's worse, right? And what are there's a couple. Is it South Africa that's really bad in terms of inflation? I think there's another country that's really bad in inflation. Look, in 2019, their inflation was 345,000. That was like in Germany in World War II. 345,000% inflation. You ever hear that, like, kind of like, in like Russia, during the war when inflation was rampant, it was somebody wanted to get their house wallpaper for their home. It was cheaper for them to use cash as its wallpaper and tape it up, because it was cheaper than going and buying wallpaper with that cash. And the people like wheelbarrows, to just buy a loaf of bread, they have a wheelbarrow full of cash just to buy a loaf of bread. I think that's true. You ever hear those stories? We'll I remember that visual. Like in the morning, a loaf of bread's $10,000. In the evening, it's like $10 million for a loaf of bread. Yeah, so I guess it's just it moves with core scientific. It just moves with crypto, and what's it called? Yeah, Bitcoin is doing really well. Got a lot of people became millionaires, some billionaires were crypto. Sheesh, 107,000. Damn, I wish it it's so hard to invest in those things. But I guess it would have paid off. Doge is at 16. Still hasn't broken through its all-time high. It was getting up there. It was getting close to 50 cents. It's still, its peak was when Elon hosted SNL in 2021. It peaked at almost 60 cents. History doesn't repeat, but it rhymes. I like that saying. Paul Revere. It just pretty much similar things happen. Maybe not identical, but very similar. Like instead of, you have the dot-com crash, and then you have the Great Recession with subprime mortgages. So there's a lot of similarities, but it's just another the result of the same. What do you think of buying stocks like SKX, KNFL based on the potential buyout for an arbitrage opportunity? Yeah, I looked into that. Not those stocks, but I did for a while when I was younger. I would try to like look at companies that are getting close to getting acquired. So Skechers, let's just give you an example. Skechers price. What's the okay, maybe Skechers now opens new tab, has agreed to be taken private by 3G Capital for 9.4 billion. So what's ticker again? SKX. So if they're agreeing to 9.4 billion, but until the deal is done, the stock won't get to 9.4. It'll get close. Well, it pretty much is 9.4. Did it go through? So looks like a done deal. If it's at 9.4 already. Usually it's like, it's not 9.4, it'd be like 9.1 or 9.2, depending on how close the acquisition is. So the way it works is, say you have a stock XYZ with a market cap, of 1 billion, and if a company is interested in acquiring them, 50% is a common premium for 1.5 billion. Then the stock price will go up to 1.5. It won't go over 1.5. It may not go up that much. It obviously depends on the likelihood of the acquisition going through. If it's extremely likely, then it's going to get pretty close to 1.5 billion. But if it's kind of iffy, like other companies tried to acquire XYZ and it didn't happen because of all the regulatory hurdles. So if it's like a 50-50 chance, maybe it goes from 1 billion to 1.3 billion. So there's that arbitrage opportunity of 200 million that you can make just by buying the stock today and waiting for the acquisition to go through. But if it doesn't go through, then the stock may crash and it goes from 1 billion to like 700 million. So you bought in at 1.3 billion, and you're down 50% because the acquisition didn't go through. So if it's extremely likely scenario, I mean, you want the acquisition to go through, but if it's extremely likely, you're probably not going to make that much of a return. So you want to kind of try to find these things before everybody else does, which is obviously hard to do. There used to be a website that I used to follow. It would show you all the arbitrage spreads. I don't think it's around anymore. Maybe if I type Skechers, maybe. Um, well, this is kind of similar, but it used to be like each company had its own line, so there'd be like maybe 100 companies. Let's go to this website, I guess. So Target, so Skechers at $63 a share. Well, that's what it is today. Okay, it was announced May 5th, so it's really new. Only a little less than 2 months ago it was announced. It's expected to close September 30th. Assuming it gets approved. Not only did it get approved by the government, but it also the shareholders have to approve, and management too. So a lot of things have to happen, but it seems like very likely. So the value of Skechers will be 10.6 billion once it goes through. Oh, so there is pretty good arbitrage because it's at 9.4. So it's a 9.4 today. So you can make, if you buy it at 9.4, because you have to look at market cap, not stock price. And then the 10.6 is the acquisition. So you can make a 13% return just like that. We didn't talk about Walgreens in this stream. So 13%. I don't see a 13% mentioned anywhere, but I'm surprised. I thought it would be. Who's the acquiring company? You think they would talk about who's acquiring Skechers? Oh, 3G. Yeah, I think we saw that already. It's right here on top. I knew it'd be somewhere. Sometimes you're looking at something straight on, but you don't see it. Okay. The acquisition of Skechers by 3G for closing value of 10.6 billion. So the stock price, if it does go through, will be 63. It's currently at 57. Oh, that's how they did the math. Okay. 57, 63. So 11% return. And they're going to take them private, but you'll get paid out. You'll get paid out to 63 minus fees and things like that. So I don't know where they're getting this 28% premium. I don't know how they calculate that. Yeah, I don't know. But that's a pretty good return in just a few months to make 11% return in just a few months. I'm surprised it's that wide. I guess there's not as many because if it's not super likely to go through, then the spread's real wide. But if it's extremely likely to go through, it's really thin. Well, the Walgreens one interested me because of the additional $3 per share potential based on the selling price of one of the subsidiaries. Do they have a search function in this website? Okay. Walgreens. Let's see. Okay, this is just Walgreens stock. I want to see that same web page where it shows you the breakdown of the acquisition. Okay, let's just Google Walgreens acquisition. I want to use the same website, Insider Arbitrage. It's pretty Insider Arbitrage. Okay, here we go. Walgreens Boot Alliance. Yeah, oh, this is just an article. Walgreens entered into a merger agreement on March 6th to be taken private by Sycamore Partners. A $24 billion deal, bringing nearly a century of public trading for the U.S. pharmacy giant to a close. So each shareholder will receive $11.45 per share in cash at the closing, and one transferable right to receive up to $3 in cash per WBA share from the future monetization of WBA's debt and equity interest in Village MD. So in addition to getting paid for your stock, you'll get this little teaser, which could result in $3 more per share, or could result in nothing. Well, or maybe less than $3. So right now it's $11.45 a share. So if you buy shares today, so it's trading exactly at $11.45. So I guess it looks like it's going to go through. So it's pretty much been stuck at that level. It did go down at one point because I guess there was maybe some concern. Because what generally happens is it was in March, like it did get up to $13 a share. But then in March, here's March, it was announced, the acquisition was announced, $11.45. So that's where the gap closes and the stock starts trading at $11.45 or within that range. But you see there's some drops. Some people get antsy. They buy it at $11.45 thinking the acquisition is going to go through. They'll get paid the $11.45 outright, plus they'll get this $3 kind of options trade. But after holding it for like a month, people get concerned and like, when's it going to go through the deal? They expect things to happen immediately. So then there's a sell-off because people start to lose faith. And then then news articles come out where Walgreens is confirming the acquisition is still going to happen. Don't worry. Then people start buying back into the stock. It comes back up to 11.45, and now it's just been locked in at that rate. It's within a few cents of 11.45 every day. So it's kind of like a guarantee this acquisition will go through. Now, the receiving the $3 is not a guarantee, because if it was a guarantee, it would trade close to 14.45. But it's not. It's trading at 11.45. Because if it was like a 90% chance, so WBA price, and you get this option, this $3 option. So depending on like what's the likelihood of this the Village MD thing going through, if it's a 50% chance, then this option's worth $1.50. And the market is not indicating 0% chance. That's what it seems like, because it's stuck at 11.45. So the market is saying there's no chance of getting this $3 in cash. That's not what the market is saying, because if this $3 was not on the table, it would not trade at 11.45. It would probably be trading at like 10.50 or 10.75 or $11. But the fact that you're not only pretty much gonna get your 11.45, you know, maybe it's a 95% chance the deal goes through. You know, of course, nothing's guaranteed, but if it does go through, you're going to get your 11.45, and then you may get another $3 on top of that. But the thing is, you could wait a long time, and you have all your money tied up into this. Because what percent of, well, let's just sum it first. So the total deal size, 11.45 plus $3, 14.45. So $3. What percent of $3? That's 21% of the investment is tied into this this $3 options trade, which is a nice return, right? But what if you had to sit on it for a year? It's worth it, right? 21% a year is great. So say I said, okay, if it does go through the Village MD thing, it'll take a year for it to happen, and then that's when you get your $3. You'd be fine with that, right? Who wouldn't be? 21% in 1 year is great. But what if I said it'll take about 2 years to get your $3 if it goes through, and there's only 50% chance of it going through? Then you're like, well, it's still pretty good. 21% over 2 years, it's like a 10% annual return. But what if I said it's going to take 50 years? Then it's not worth it, right? It's not going to take 50 years, but I'm just trying to give you an example. Like, at what point do you not buy into the stock to get this extra $3? But that's how you learn. You don't have to buy the stock. You probably should buy a share like Warren does. Buffett, he just buys one share so he can track the company better. Yeah, that was something else I was curious about. Like, would I get 11.45 back when acquisition completes, or do I have to wait? No, once the acquisition goes through, you'll get your 11.45. It won't take that long. Maybe like a month or less. But the $3 thing can take a long time. If it does happen. So, but you could look into this. Share closing second one transaction in one So one non-transferable right, a divested asset proceed right, a DAP, to receive $3 in cash for a VBA share from the future monetizations of WBA's debt and equity. Okay, so it's a future monetization. So if there's no future cash flow from Village MD, then you get nothing. But if there's limited cash flow, you may get 50 cents, 75 cents, and that may take a year. Or if it's a lot of cash flow, yeah, you just don't know. You don't know where it's going to go. But one way to kind of like give yourself an idea is just learn about Village MD. Is it profitable? What's their you could look at WBA's like 10K to learn about Village MD. How is Village MD doing? Yeah. So the future cash flow of Village MD, that's like if you owned a like a Subway restaurant, right? And say there was 400K of revenue. Say you owned it outright, you're not going to get 400K, of course. There's a lot of operating expenses. There's royalties. There's a lot of, so you may end up with, they have, they don't, you can't really make money owning one Subway. It depends where you live, but generally you need to own like 5, 6, 7 to make money, because then you're not going to, unless you have like a top 1% center, top 1% Subway restaurant, because I'm sure some make $200,000-$300,000 of profit, but most of them don't make that much in profit. So, and a lot of them lose money. Yeah, I think Village MD, I think, is a pretty safe, company from what I know about them. But the thing is, so if you bought, like, if you said, I think about 200K is appropriate. Let's just say you wanted to buy a Subway, and there's a Subway in your town where you live. So you go to the owner and you ask him if he's willing to sell, and he is. So, and you negotiate 100K. But when do you get your money back? Well, I mean that's who knows, right? But you could look at their revenue. You look at their expenses. Now you have a little sense of maybe when you get your money in 2024. He shows you the income statement. So 5 years. If you could replicate 2024, of course you want it more, right? So if you can somehow cut expenses, maybe instead of hiring a manager, if you're semi-retired, you run the store and you don't have to pay anybody. So instead of paying that manager 35K, let's just do a 30K, make it easy in the math. That's 30K less of expenses. So now you make 50,000. So now you're down to 2 years, but you have to give up. If you have a job paying 100K, you're not going to work at Subway and fire someone who's making 30K. So yeah, so it's kind of similar with Village MD. It's a company that has lots of revenue but lots of expenses, and you'll be getting a piece of that as the you and like a billion other people will get a piece of Village MD. But yeah, it's interesting looking at this. The thing is, I just don't like my money tied up for years and years and years, or even my money tied up for a few months without there's no guarantee. And so I just prefer to invest. And if I'm like this year, I'm doing great, and I have like, I'm up like on Netflix, I'm up like 50%. So I'm not going to get that return with a Subway restaurant. I'm not going to double and triple my money. It'll take years. So like just my Netflix alone went from 800 to 1,300. So I'm up like 60%. So instead of putting 100K into a Subway franchise, you should have put 100K into Netflix, because you could have turned that 100K to 160K. Of course, you don't know this. And what if Netflix go down? If you bought it when I bought it in 2022, that 100K, you burned it, half of it. It's down to 50K. And then you would have said, oh, why didn't I just buy the Subway restaurant? I wouldn't have lost any money. I would have had an asset that's generating cash flow. But yeah, no, this is interesting. In terms of M&As, I prefer to try to find a company that is a good target to get acquired before anybody's talking about it, which is hard to do. But if you pick a company that you think could get acquired, and even if they don't get acquired, the stock could still go up a lot. But if they do get acquired, then you could get a nice, 50% return right away. Merger and acquisition. What somebody mentioned. Okay, here it is. What do you think of buying stocks like K, NFL? And neck is always so tight. What's K? You say the letter K. Is there a ticker? K? Oh, Kellanova. And FL. Florida. A Foot Locker. Yeah, Foot Locker. Let's see if that website, we could go back to that website. That was helpful. It kind of broke it down nicely. Okay, so the Dick's Sporting Goods to acquire Foot Locker to create a global leader in sports. So this could create a antitrust violation, meaning it could lead to a monopoly. If that happens, or if the government thinks that will happen, then they'll put the kibosh on this acquisition and not let it go through. Because that's what's happening with Kroger and what's it called? Kroger and Albertsons. It's going to create a company that's just too big and powerful, which I think is ridiculous, but whatever. Dick's. I never went to a Dick's. I remember this guy at college used to work at a Dick's. Foot Locker I've been to. Okay. Dick's, a leading US-based full omni-channel, blah, blah. The transaction implies an equity value of 2.4 billion, enterprise value of 2.5 billion. That other website was much better because it gave you the details pretty nicely. Okay, under the terms of the merger agreement, which has been approved by the board of directors of Dick's and Foot Locker, Foot Locker shareholders will receive either $24 in cash or 0.1168 shares of Dick's common stock for each share of Foot Locker stock. Based on the closing price of Foot Locker common stock, the $24 per share consideration represents a premium of 66%. So usually it's like 50%, the premium. That's like an average for these acquisitions. But it could be as high as 66, could be higher. The total consideration represents 6.1. Dick's intends to finance acquisition through a combination of cash and debt. Usually when an acquisition gets announced or goes through, the company getting acquired, in this case, Foot Locker, the stock goes up. Sometimes it doubles, but it usually goes up at least 20%. And the company, the acquiring company, Dick's, the stock goes down. Because in order to acquire a company, you usually need to take on debt. So it makes your company weaker than before, because now you're adding debt. And you are receiving an asset, a company, but you generally are overpaying for that company. So stock goes down in the short term. In the long term, nobody knows what's going to happen. That's why you watch my channel, I guess, right? But the thing is, you're never going to be happy because, like, I remember people at some other job. They would like, why do you work? Everybody complains about work, about their managers. So they're like, why do you work? I'm like, what do you? Just because I have $1 million saved up, I'm just sit at home all day and do nothing. It's not even that much money. I mean, you need a lot more than a few million to just not work. It's expensive. Even like, I think if you don't have much money to your name, if your net worth is like 50,000, yeah, sure, $1 million seems like that would change your life. That it would be amazing. You'd be rich and you can go on all these lavish vacations. But it's not the case. Because you can easily burn, especially in California, easily 100,000 a year. And I'm not even doing anything spectacular, just living your life. A lot of people right there is like almost $60,000, and you didn't even get into like even if you find a good deal, 3K it'll be hard to find a place if you have kids, especially 3K. You'd have to go far out. You can't stay in the city. like that's almost like not doable in California. I mean, maybe if you lived like in Oakland or something, or I mean, I guess if you're by yourself, you might be able to get by with 3K. Um, but I mean, if you own the house, then then you have to add it. If you own a house, it's probably 1,000 in taxes. I'm close to 2,000 in taxes. Um, and then you just got your bills, like like for the home, your gas, electric, phone, internet. Um, that's another 1,000. Just PG&E alone is like 350. Crazy. And if it's the summer, I mean, if it's a winter, your gas maybe your PG&E bill alone could be $1,000. Then you have other bills too. You have Comcast, that's expensive. Internet cable. Um, you got to eat. This is just the bare basics. I'm not even getting into like, you know, you may want to buy like clothing, or you may want to maintain your car. I'm not this is no vacation either. This is just to get by your day-to-day life. You have to buy things like toothpaste and all that stuff. It adds up. If you have a dog, that's a couple $100 a month possibly. So you can easily burn 100K, and not even have any assets left over. Just to pay, just to get through the day. I mean, it would be great if you spent 100K in a year and half of that was investing in stocks. Then you have that potentially is growing. But I mean, if you own the house, you do have an asset. It's not that liquid because you can't just sell it. I guess you could take a home equity loan, but if you need money, you usually have to find it somewhere else, not in your home. If you own stock, you can just sell the stock. The nice thing about owning your home is that you save money each month on your rent payment because you don't have to pay anybody rent. You have a mortgage, and hopefully at one point you'll pay off the mortgage. Which I mean I did. I paid off, like when I retired, I paid off the house and saved up like close to $1 million, and it's not that easy. People think, oh, you don't have to do anything, just not work. But things get more expensive, so it's not. I mean, I guess I could like not work anymore, but I wouldn't be living a really really comfortable lifestyle. Like I couldn't really vacation a lot. I would just pay my day to day. Okay, well, this is a fun stream. Some interaction. There always seems to be people watching. Just no, they're not talking. So it'd be good to get more interaction. But yes, I guess I'll see you tomorrow. Victor, me and Victor are gonna have a stream probably Sunday. So yeah, I think I have to stream now because I can't really record videos. I don't know what's going on. It's not working. I gotta call Camtasia. Okay, have a good night. Thanks for joining. I'll wait for at least one person to say goodbye. Just to prove that it's not just bots watching the channel. There are humans. Okay, Justin, thanks for confirming that you're humans watching the channel.